Good morning, everyone, and welcome to Morning Market Movers, where we do live analysis for day trading and take a look at hotspots for the markets today, Tuesday, May 3rd. Tuesday, May 3rd. My name is Todd Rich. I'm with Nadex. With me, Brian Caprice from Keep Trading Simple. So, for the markets this morning, not a lot to particularly talk about. We certainly are going to discuss the volatility in equities. Yesterday was quite a wild ride. So there's a little bit of learning that we could probably do as well, taking a look at the charts from yesterday, because I think when there's opportunities to do that, we should do that as well. What do we have moving this morning? The Aussie Dollar's making a move. Uh, there was an interest rate play there. Brian's going to go through the headlines there and talk about that. The one place where we are seeing some fairly significant movement this morning is natural gas, and we know that the energies are in play. Natural gas, oil, with what's going on in Europe, are going to see continued volatility, but we don't have a whole lot to really go on. I think everyone's still waiting to hear what the Fed is going to say tomorrow. And it's not just the number. Do we get a half a point interest rate increase? Probably. There's a chance at 0.75. Who knows? But I think really what people are going to be looking at is the posturing for the rate at which they're going to raise rates, and how far they're going to go. So I think everyone's waiting to get that color commentary from tomorrow. So in the meantime, volatility is in play. Markets are moving. They are thin. The one thing I do want to remind everyone is we are doing the full-blown session today. So in 3 hours, if you haven't registered, it's after the open. It's a midday. Brian's going to go through all of the markets. He'll go in depth. He'll look at every single one of the charts, and he'll also be looking ahead for what else is coming up the rest of the week. So if you're not registered, please, I just sent the link, register. And if you're not able to join that register, you'll get access to the recording. So hopefully you could join in 3 hours. Before we jump over to the charts and start looking at some of the headlines and the few things that we got on the Aussie dollar, energies, namely nat gas, and we'll take a look at some of those equities charts as well. I do need to share this disclaimer that trading involves risk, may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. And just as a quick glimpse on why we're going to be looking at nat gas, yeah, it touched 8. And it's the supply. We've got supply problems. We definitely have some supply problems, and it is going up. With that, I don't want to take any more of Brian's thunder. Let's take a look at the Aussie dollar. We'll jump into the energies, and then I'll chime in again when we get over to some of the equities charts, because there were some fun things to look at in there.
Yeah, as far as currencies go, the only movement we have is really the Aussie dollar, and that was again because of the surprise rate last night. It was expected to go up 0.15, and I said that was kind of like a weird number. Normally we talk about quarter raises or half raises or 1 point raises. They ended up doing the quarter raise, which I was like, oh, it's a big surprise. Now we did hear, I'm going to say it's like 3 weeks ago now, that they were talking about getting it up to a 0.4. And the market wasn't happy about it, but the market was happy that it surprised at the top side. The forecast was the 0.25. It came in again. Like 1.5 is a very, or I'm sorry, 0.15 is a very strange percentage raise. So that's why I'm not necessarily surprised, but it's really the only thing moving in the currency market. We do have some speeches. Lagarde is speaking right now. We have the JOLTS opening, which can be a big one for the overall indices. And then tonight we have some unemployment rates and a couple other speeches. But besides that, it's more or less quiet. 2 hours ago, there has been movement in the euro. There are comments about, like Draghi is, basically Germany says, oh, if these guys join the EU, yep, we support them. Remember, the EU is not a military pact; it is an economic pact. It's very curious. It's interesting that Draghi says that Italy supports EU membership, and again, it's economic. It's for trading purposes. It's not for military. Of the Ukraine, Albania, North Macedonia, Serbia, Montenegro, Bosnia, and Kosovo, which is interesting because in my lifetime, I remember the genocide that was happening with Bosnia and Serbia.
Yeah.
And I actually, it was towards the Serbs. I've actually been there in Montenegro as well as Serbia. So I've been to those countries. they're definitely still trying to figure things out after Yugoslavia kind of broke apart and broke into all these pieces. So it is interesting that a country that within the last 25 30 years committed genocide, open genocide that the world knew about, that you would say, yep, let them in, it's all good, right? I don't know, kind of interesting, but again, it is an economic pact, not a military pact. So, they're like, what? There was one of his other comments was, who knows what this will lead Russia to do? Russia's already said Yugoslavia can, or Ukraine can join the EU. It's an economic. There's no military support associated inside of the EU, so it doesn't pose a threat. It's literally so they can use similar currencies and have reduced tariffs between trading partners because they're literally right next to each other. So
It'll be way more interesting when Finland and Sweden make the call on NATO.
Yeah, but the thing is too, that has been in the works for a while, so that's something new, and they're not considered a buffer state for Russia. So, they haven't really brought it up. I mean, is it considered aggressive that they're expanding? Sure, but at the same time, the reaction on the other side will be that there will be a tighter pact between China and Russia, and then everybody's going to get pissed off that they're getting aggressive. It's like, yeah, guys, there's equal and opposite reactions here. This is what we see here. NATO gets strengthened. The opposing side is going to also strengthen to kind of level out. That's what the Cold War was about. Yeah. It's what everything out there is about. So
we seem to be heading that way. And I don't know if you caught the 60 Minutes episode this weekend, but
no.
The head of the FBI, the greatest threat to the United States is not Russian hackers. It's the People's Republic of China. And the attacks that they're doing and the theft that they're doing of our intellectual property. So it is kind of interesting, our enemies, and let's face it, as much as we want to make China as our friend.
Yeah. And we're getting ready to reduce tariffs on that country.
Yeah. So
it's been out for years. I mean, like I said, love him or hate him, Trump was very, very hard and very kind of hard-nosed on China, but he had legitimate reasons for it. The intellectual property was a big deal. The tariffs is not everybody's favorite thing out there, but again, that country is blatantly doing it. And again, if the FBI right now is just saying, yep, they're the biggest risk. I mean, everybody's so focused on Russia and Putin needs to go and everything else, but right now, China is sitting over there silently saying, okay, sanction them. We'll take all their stuff cheaper because we need it, because we have a third of the population as ours. India is also doing the same thing. So all we're doing in this by weaponizing the dollar as well, and again, we're seeing that already, is China is getting more and more power, and yet people are blind to it because of they can't think of it objectively. So it's an issue. Now there is one bit of movement I want to talk about real fast as well here. The euro is spiking, and it's bouncing between two levels we talked about yesterday. It is 77 pips in the last really like 2 hours. There's not many headlines besides some of the things that we're seeing from kind of this, the German chancellor in Italy and things like that. German unemployment drops the least in years as war weighs on economy. So we're hearing interesting data. I don't know, maybe it's this one. The industrial prices are up 5.3 in the euro area, and by maybe it's not as much as what the forecast was supposed to be. But none of the data is necessarily great out there. I wouldn't say that any of the data is necessarily horrible for the dollar as well. I mean, there's no major headlines. There's no major news out here. So it's odd that you're going to get something, again, U.S. Treasury dropped to 3%, top 3% for the first time since 2018, but that was 5 hours ago. This is a pretty marked 7:15 in the morning. Again, there was buyers there. We had talked about that area yesterday. And again, we could refine that further, right? And it came right, and it's right at the 105, the turning point that we mentioned that. And again, that's what this is here. This 105 is a very, very big number, but you can see in the overnight, it did kind of push down. And again, the yellow area was an area we're watching for. But very, very sharp spike up with really lack of any headlines. I would say look for a reversal possibility today. I don't know if it's scrambling to get in the correct position for, comments out of the United States. I'm not sure. But again, that's a very, very fast raise in a very short period of time.
Yep.
That you don't typically see. And right now, besides Aussie, that one is up. Now, I want to cover Aussie real fast because, again, we're talking about news and what's happening. Like I said, we do have jolts today and then a couple other like New Zealand-based news, but the rest of the week, every single day, we'll cover this later, but there's a bunch of news in here. If you guys don't catch the midday program today, we talked about getting long Aussie because, again, raising interest rates, look to see what it does. What does it tell us? And again, the market may do it with jolts today. You can see that right here, obviously where the calendar is, that's where the news was released. You can see that the market, there was a basing level that it pulled back to. It went up, it based, and it pulled back, that kind of Harry Potter, right? where it goes up, it bases, it pulls back again to a zone, and that's our entry, and then it takes off. In this case, you can see the spike is actually quite large. From the takeoff point at news, 63 pips almost instantaneously. This is a 15-minute chart. That's why it looks a little bit weird, right? But you can see the candle all the way up, and it actually came up and grabbed that 78.6. So we really don't need this anymore. I can take it off because once it hits that, I'm done with it. But again, nice news spike coming through, and again, it's going to find sellers. So we're really looking for this to reverse up top. I would say that if we can get up to really kind of this old, again, at this point, I don't need the 2360 there, but this old level up top here, I would say that there's probably some reversal potential. I'm perfectly good with this because, again, I think the U.S. tomorrow, while I think it's going to be 0.5, I think there's a slim chance that they're being very, very quiet. This would be where they would kind of sneak that 7.5 and be like, yes, I told you we're aggressive on this, So it's kind of getting up there. We'll see what it does, but that's going to be an important piece. And the Aussie yen was the same exact thing. Yesterday we talked about a breakthrough 92.30. It kind of pulled back right before news, and that's what we're looking for. And again, it launched itself forward. And if you didn't catch that one, it did come back down and gave us another entry again. So they both had the same pattern where basically an hour and a half beforehand, oh, news is coming, you're going to raise interest rates, and it went straight down. It literally pulled back on all of them. You know that, hey, there's something funky here. Something smells fishy when you're raising interest rates, and it pulls back the hour and a half beforehand. But overall today, it's kind of a weird, like the VIX is down 1.7. You can see yesterday. It's strange. I was saying that there was really no reason for the VIX to continue to creep higher yesterday that I expected a green day based off of what the news was. And all day it went up, 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 up. And then all of a sudden we hit like 2 o'clock. And that's when it finally fell through the floor and everything went up, So it ended up working out the way that we thought, but you definitely took some heat if you were long from the open yesterday. But today, VIX is down. And again, it's not really, there's not a whole lot down here. Again, this is not a supply and demand based, commodity or anything. So it's pushing down in the indices. They're up a little bit, like 0.2, again, approaching a 50% retracement. NQ up 1.9, again, messing around with that 50% retracement. There's levels in here where I'd be like, this is kind of interesting, right? YM also, if I extend this down to the lows of yesterday, also right around the 50 and at a level. So again, puts us in a precarious position. And then yesterday we talked about a short coming off that 81.92. It did hit. If I extend this across, you can see it. Actually, it hit the first one, not the second one. It's just the drawing right now. But again, came up to that same level we talked about. Even though you took a lot of heat, we ended up closing higher, came up, grabbed it, and is pushed down again. But we know there's a level up there at 91. So they're all up slightly, but they're all right at a 50% retracement from really Friday's highs to Monday's lows or yesterday's lows.
Yeah.
So it's going to be an area where technical traders are going to look at it. And I don't know, maybe JOLTS is what kind of sandbags it today. Maybe we see a little bit of up and JOLTS comes in bad job openings. Because again, now everybody's like, oh, the economy, it's going to slump and this. That could be where it's starting to take off. So
yeah, I just think everything's going to be kind of thin until we get additional color commentary from the Fed.
Yeah. I mean,
and in the meantime, we're just going to see volatility like we did yesterday. I mean, everything was
going to be
negative.
The biggest raise. I don't even know the last time we did a 0.5 raise.
Yeah. And we're looking at doing several of them in a row. The question is it priced into the market already? And are people going to look at that and jump in? Because right now the sentiment is definitely negative. When all the way up there were the bears, oh my God, we're going to crash. Oh my God, we're going to crash. And then the market kept going. Then when it finally turned over and we're down 20% from the highs, okay, they've been wrong for how many years? They're right now for a month. And then it's not enough. We get a 20% pullback. Oh my God, we're going to get an 80% pullback. I'm like, what?
Yeah, I mean, that's the thing that people are, obviously the 0.25 did absolutely nothing.
Yeah.
Ballard said it would. All the experts, the market was unhappy with it. Everybody said that it was.
0.5 it might actually be seen now as a positive, like, oh, they didn't do 0.75. Woohoo, to the races.
Right. That's the thing. And again, this is kind of the head in the sand thing, right? The UK has done 4.25s now, I think 4 or 5.25s in a row, and they're still seeing it increasing. Like their economy is obviously being affected, but the inflation is not slowing down yet. It's funny that Powell mentions, we need to front run this. Well, front run means the beginning of when you do it, not
front load it. Yeah, get ahead, get out over in front of it.
Bullard was calling for 0.5 in the beginning, and now it's like, but it did nothing. Now we need 0.75 to really get ahead of this. And now they're like, well, we're going to front load it. It's like you already missed that. You failed miserably on that objective, and things are getting worse. And the retail traders already started to short and get very, very negative on a 0.25. They need to control inflation. It's only going to cause more problems. And again, hate going towards the political aspect of it, but the news this morning was, if you guys haven't heard, the Supreme Court leak. Again, there's major problems with a leak. It's something as of the highest office of the Supreme Court. If we can have a leak of data, that's a major problem in itself that people should be talking about. It's happened like 2 or 3 times in history. But when you go up to that stage, there, things are fluctuating back and forth right now. We're looking forward to what's going to happen in the next election. If they don't control inflation, it's a landslide victory for the other side, and then we're going to get weird policies because there's a major shift again. So
the interesting thing is the difference between the economy and the stock market. And again, this is where everyone tends to conflate the two. Yes, the economy has got a problem because we are way overheating on the inflation. But then if you take a look at earnings, companies raised their prices. Companies
people are still spending,
and people are still spending. I mean, today, who was it? Burger King and I can't remember the other one. I mean, companies. Mm-hmm. So even if they raise rates, yes, they're going to slow the economy down because they need to, because we need to bring that inflation back in line. But companies themselves, does it necessarily mean we have to see a crash in the stock market because of that? And the answer is no.
Well, there'll be a pullback, but pullbacks are not healthy. I mean, that's the thing. A lot of people
and we've already had this. So I just think it's like we've pulled back in anticipation of it. And now, and now it's like, but all you hear now is negative. And before, when things were going through the roof, and you have to admit, some of these valuations were getting kind of crazy. Like there was no.
The one thing that I can tell you is
some of them.
During the last 3 years, who are the people that have gotten richest is the question that you need to really answer. And again, everybody has opinions, but because of where we've gotten, everybody had free handouts, and it's just like the housing crisis. The only people we can blame for the housing crisis is us, because we were the greedy ones.
We're the ones who money. Right. Yep.
They gave it to us, and it's nice to blame it on the banks, but the banks didn't force us, the general public to take. And it wasn't me. I didn't buy like 12 houses during that time, but people that tried to. Right?
I bought the one I'm living in, and I didn't even pay through the roof for it, and I didn't borrow 95%.
Right. But the only people we can blame are the people that did it. There are people that got plenty rich during the last 3 years. The problem is, because of all the free assistance and things like that, inflation has now gotten out of control, and the raising rates, it's going to lower home buy. People are not going to buy. They're not going to, the refis are going to go down. No one's going to refi at a higher rate. People are going to be, questioning whether I should just buy or rent. All these things are considered negative for the overall economy. And what happens is when people get concerned about the economy, then you don't have extra money to spend inside of the stock market. And because in the last 20 years, we've had 2 major crashes, is it going to crash again? People are like, yep, there it goes again. I knew this was going to happen again. So that's why things like Bitcoin have come up, because people are like, oh, no, I want stability. But, we were a product that was, all the way down, all the way at 68, and then came all the way back down again. And then it's not providing stability either. So it's not the same, but it is. And again, whether it be OPEC, whether it be the Fed, everybody wants to try to smooth things out. Unfortunately, in this day and age, everybody is so polarized. There's no such thing as a smooth wave anymore. It's up, down, up, down, up.
It's just great volatility for trading, and that's what we're here
crazy,
for.
Yeah.
The one thing that we haven't covered yet that I want to cover before we call it a morning and tell people to come back in 3 hours, were the energy things. Let's do.
Oil popped a little bit. It hasn't pulled back all the way yet. And again, who knows what's going to happen? Like I said, China's like, please ban Russian oil. Please ban Russian oil, because we need all of it. It really hasn't moved that much. I mean, we talked yesterday about getting it, popping through, maybe jumping up $2 or $3, and again, it's moving around. Oil inventory report is tomorrow. We'll see more there. Natural gas up another 6.5%. We had 2 targets that I talked about with my group, the 780 and the 799. It didn't even slow down in either of those 2 targets. That's why they're black. We talked about it breaking through this level, and it did. It broke, it pulled back, it came down, it touched it, and it took off. And we got above $8. It got to $8 and basically a part of a penny. It's insane. We were joking last summer that Brian was going to have to buy natural gas at $6.50. It's now at $8. Right now, it's at $8. So Where is the end of this? I mean, it's great that they want to block it, but this is, again, we're not feeling for winter yet. Other countries are worried about, again, on a country level, they're worried if they block, how are they going to be able to afford natural gas, or how are they going to get enough natural gas supply for the winter in Europe if they block Russia, because that's, what they want to do.
Start storing it now.
Well, yeah, not at $8.
Oh,
But the
wait,
question
it's
is,
$8. I can't.
yeah, but could it be $10 by the time the United States is thinking about filling their gas? This is, again, we know that the main driving force of inflation is the energies, and this is, and I keep saying every time this pulls back, get long, get long, get long, get long, and it just keeps going. And I don't see a top yet with everything now. Who knows? And as you guys know, yesterday the news was Putin is going in for cancer treatment, or cancer surgery. So he's going to temporarily have to give up power to his number two. The number two guy is like the evil KGB. The guy's even worse than Putin. God forbid Putin suddenly, succumbs to anesthesia or something like that. The new guy's even crazier. God knows what's going to happen with this. So there's a lot of things out there. I think natural gas it's something to highlight. I'm not ready to short it yet, but I'd really be watching oil today. And then again, we'll talk about it later. But don't forget about the API oil inventory report today. Get back down to the 102 maybe, but that's where we were talking about the punch through yesterday was the 102.20 to get up to 105 or 104. It went above. It went all the way up to 106. So obviously a bit more movement than we've seen lately, but it's still in play, and we'll see. Like I said, yesterday there was a lot of headlines. Germany wanted to just. We're gonna call it quits right now. No more oil. We'll see what that does to the market. Especially with OPEC speaking on Thursday. So
it's gonna, we're gonna have some volatile times, and we'll continue to go to the charts, and we'll continue to look for potential levels that make things, to help you along your journey. But volatility is great for traders. So
and Lagarde's speech at 9 a.m. today, guys, was a surprise. It says speech comes as a surprise from the source. So
yeah.
Who knows what that means?
Yeah, we'll see what that means. With that, any questions for Nadex, please email us, customerservice@nadex.com. Any questions for Brian or me, our emails are up there. If you want Brian, you can catch him at support@keeptradingsimple.com. And remember, I did drop a link in for today. The session's in just less than 3 hours. Please register for that. It'll be a 50-minute to an hour long coverage of every one of the markets, and also assimilating what we saw in the open today, and then looking ahead for the rest of the week, any other announcements, economic reports and things of that nature to prepare you for the rest of the week. Hopefully you can join then. If not, you can certainly watch the recording, but again, please register. So hopefully we'll see you again in a few hours. If not, we will catch you again tomorrow morning. Thank you so much, everyone, for joining. And until we catch you next,